The following 10 insights will summarize your life. I will speak slowly, so your mind and your soul will understand. Number 1, you were born in a cold prison. It is your country, your state. Number 2, you have to pay for the prison stay. They call the prison fee taxes. Number 3, you have no say what will be done with the money, but you have to pay. Number 4, to pay the money you have to work. The prison encourages you to buy new shiny products, so you feel better about your poor existence. Number 5, you are not allowed to exit the prison and live on your own. They will hunt you and make you pay. Number 6, only a few prisoners have walked far enough to see the prison wall. Number 7, the prison gives you news and entertainment so that you don't discover the prison walls. Number 8, the prison does not allow strong family bonds or strong brotherhood unless you are a part of the group that is running the prison. Number 9, the prison you live in wants you weak, sick, and divided, because weak prisoners can't climb the walls. And most important, number 10, the prison is mostly run by other prisoners. It will collapse if enough prisoners will wake up. Go your way, Bratan. Reunite with others. Find the walls. Climb the walls. Every fucking day. This is the Grim Hustle. Be honorable.
What is going on YouTube? It's Brendan from Market Makers. Hope everybody's having a fantastic week. Guys, lots to talk about in this video. That clip, I wanted to play that clip. That is from Grim Hustle. It's a great YouTube channel. They have a ton of subs. I thought a lot of you would enjoy that. A lot of their messaging is kind of a grittier version of self-help advice or financial freedom. I think you'd enjoy it. So go check out their channel. It's pretty cool. Guys, the world is a prison. Your life is a prison. So I want to play that video. This is why we trade, to find financial freedom. Took me 20 years. A lot of you can do it a lot faster. Some of you have already done it. Took me 20 years to leave my corporate job at Merrill Lynch and be able to retire and trade. And guys, it's a different lifestyle, something everybody can work towards. And that's why I have this channel. And that's why this channel has exploded since we started it in the summer of 2021. And it's all thanks to you guys. So please do like and subscribe. If you want to continue your journey, continue your education, consider checking out our Discord, fantastic community of 12,000 people. SimpleFX, key sponsor to the show, and BingX will both pay for your first month if you do want to check out our Discord. All those details, all you have to do is join one of those exchanges, message Lee. All those details are in the video description, including our Telegram. Do not respond to spammers in the comments, okay? Use our Telegram in the video description. Hope to see you guys in the room. Let's jump into the charts. So the VIX is still holding up here at almost 17, 16.94. You can see on our money flow here, VIX can still easily rise a lot. It just crossed 17 as we were recording. We are above the 50. Guys, you have to understand, lots of people in this space, the TA space on YouTube, it is a dumpster fire. They don't understand the market cycle. You guys that have been watching this channel, you know about the 7-year cycle. The 7-year cycle, I have the full video uploaded on Rumble, was discovered by a religious scholar called the Shemitah cycle. Jonathan Kahn discovered it. If you guys are interested in it, because I see a lot of comments and questions about it once again, I put that video on Rumble. Go check it out. You can type in Market Makers there. Can't put it on YouTube, but that'll give you the background of it. But Had you known about the 7-year cycle, had you known, you would have been aware of the crash in 1972. You could have took your money out and protected from a 64% drawdown in the S&P. You would have been aware of the crash that happened under Paul Volcker, the 79-80 7-year cycle. The 1987 market crash, played clips from the GFC crash last video or 2 videos ago, but it also, they talked about the 1987 crash. The 1987 market crash was part of the 7-year cycle, as well as the 94-95 bond crisis, part of the 7-year cycle. And then, of course, .com was the 7-year cycle. 2008, the GFC was the 7-year cycle. And we had the current 7-year cycle, which was September 2021 to September 2022. Now, the last 2 7-year cycles, guys, GFC and .com, what you had was you had a break in the markets, and then the markets bottomed the following year after the completion of the 7-year cycle. Now, what we have this cycle is we had the markets top out, the NASDAQ, Bitcoin, Russell in November of 2021. And then you had the actual decline happen end of that year and then throughout 2022. So if that 7-year cycle was to stay the exact same as the previous 2 cycles, you would be bottoming this year. Being that we're so late in the year, don't see that happening. We still have to take out our prior lows, which could be what this is the beginning of, the collapse in the marketplace. For that next pull down, S&P 3200, Bitcoin 12, 13K. Key point here, you have to take out your prior lows because the markets never bottomed prior to a recession. So we're going to look at that, but understanding that 7-year cycle, guys, if you had just been aware of that and you invested, say, in an ETF, right? Or you bought the S&P back in early 1970, let's say 1970. If you took your money out September of the 7-year cycle every 7 years and just kept it out for 1 year, didn't pick tops and bottoms, you just took it out beginning of the 7-year cycle, put it back in a year later, didn't pick tops and bottoms, you would have 3.5x'd against the person who just left it passively in. 3.5x. And now you understand why 84% of professional money managers cannot beat the S&P over a 10-year term, because most people don't understand cycles. Most YouTube TA people don't understand cycles, and that's why they're advising you on things like buying gold and silver when in the GFC, those 2 assets absolutely collapsed. Gold 34% down, silver 61% down. Understanding you are trading in a bubble, understanding the market cycle is how you're going to find financial freedom. Look at the VIX shooting up. We're going to get into why that's happening. All right, so let's go ahead and jump into this. VIX is shooting up. Let's check out the DXY. DXY hit our 786. Look how accurate that is. 103.603. Looking here at the high was 103.598. This is how accurate fib layouts can be. So the dollar's flat. VIX is shooting up, and that's partially because Apple is tanking. We're going to look at Apple in a minute. Guys, I hear this as well from YouTube that the rates have peaked. The yields have peaked in the government bonds and treasuries. Look at the 5-year. Look at the 5-year. So I want to put this in perspective for you. We're in a massive Wyckoff here, okay? Now, if you understand this, we're testing near the top of the range. Could they have peaked up here? They could have. This is going back to October of 2022, but this can easily go up to 5.10%. And we are at 4.423. Again, higher yields puts more pressure on the market. Let me show you where we're at in the bigger picture of things. Bigger picture of things, you have to go back to the GFC. We are testing the base of the double top structure in the GFC back in 2006, 2007, right before the crash, okay? So if we break this base, which is flipping on top of Wyckoff back over here to the right, you're going back up almost to, look at this, almost to the identical high, 5.1 of the GFC crash cycle before this massive parabolic decline. Now, why would the yields keep rising? Well, U.S. debt is becoming less and less attractive. The government keeps spending more and more. Also, we have the Fed predicting that the GDP, they have a crazy number on the GDP. They're talking about 5.8%. Part of the reason you're seeing market weakness for this next quarter, they're predicting 5.8. So what does that mean? If we're at 5.5 on the Fed funds rates, they're going to keep hiking. And did any of you pay attention to the Fed minutes that came out? The Fed minutes that came out, I have Bloomberg on all day. I can't even, CNBC is so left wing. I can't even watch CNBC unless there's somebody coming on that I want to see because they're so incredibly stupid. The hosts are incredibly uneducated. The money managers overall they bring on have no idea about cycles, no idea about TA. It is just the perma bull channel, right? It's one of those Bitcoin channels in the TA space that just draw magic lines up in the air saying 250K for 3 years, even as the market craters 75%. It's one of those channels. But at any rate, CNBC reported that here's the key qualifier, some of the FOMC, the Fed panel, right? The Fed governors, some of them support continued raising. Bloomberg, some of the Fed governors support, the voting members support continued raising. What was the actual minutes? What did the actual minutes say? It said most being the key word, support continued tightening of and raising of the Fed funds rate. Most, very different from some. Some just gives you an idea of a few. Most is the majority. So I expect a hawkish Powell next week at Jackson Hole, which can be key to continue to pull the market down. Again, and look at these levels, guys. Market cycles repeat for a reason because human beings have herd mentality. You see it on YouTube. Look at the biggest channels in the space. They were the biggest permabulls that all missed the 2022 decline. Every single one, okay? It was a correction to them. So this is where we're at on the 10-year. 10-year also testing top of the range. If the 10-year breaks out, you're looking at the 1618 at 4.606. So what could cause this to not happen? Well, the crash. If the market continues to weaken, expecting the Fed to raise, the crash can cause everything else to come down as well, guys. So this is what you have to be aware of. Again, it's the same with the metals. The metals don't have to follow the exact same 7-year cycle, but they did in the GFC. You saw it in oil too, because you saw it in the pandemic. Why did oil crater and actually go negative? Because people are front running the event. You have to understand, if the economies crash globally, even though energy supply is tight, the price is going to come down because the growth is so low, you don't need as much energy. So it's a lot of moving parts and variables, and the vast majority of people don't understand that. Okay, they don't get it, but you guys get it. That's why we have a channel. Looking at the euro dollar. Euro dollar, flat, not moving anywhere. So I covered this extensively last video. I don't want to spend a lot of time on it. Just quick update. So your key resistance just above you, 1.092, because we do have a lot of Forex traders that watch. And then if you sweep this valley, guys, system of valleys, you sweep your valley at 1.0833, looking for the next check down at the 1272 at 1.07133. This is assuming the US dollar, the DXY continues to rise. Again, your bullish pattern still intact with higher lows, but you're getting close here, guys. You start breaking this level, you sweep this valley, you're moving down, and ultimately you'd be breaking your uptrend. MFI on the euro dollar printed a double top, still in bearish territory. Momentum is flat, daily time frame. What is this doing for the Dow? The Dow is the best behaving, the most bullish still of the indices. The Dow is still the DXY. The Dow is still above its 50 on the daily time frame. Still mid-channel here of your uptrend, okay? So if you lose the 50, if you start coming down and lose the 50, you're going to your 618, which is what? Your pivot top, your pivot check, right? That is 34,399. Now we already had the S&P lose the 50. The Nasdaq's dumping well through the 50. We're going to look at those, and then you can see this coming down more. Okay, I got Bitcoin up next, guys, for your crypto bros. So this is what we're looking at with the Dow. Okay, when it loses the 50, watch 34,399. 33.99. Then you're at midpoint here on the 786, 34K. And then ultimately your 1 fib returning to the base, 33,595. This is a very orderly decline so far, guys. So I am looking for bases to be put in and potential big rallies or even some type of rally to come back up for a tradable double top on most of these assets. Let's look at Bitcoin. Look at Bitcoin, look at the pull down here. Crypto savvy's happy. But all right, so let's look at this. So again, symmetrical declines, guys. 3-day chart, you are in bearish territory. Momentum is just minimal. You can see price declining. And again, this is the exact same pull down as this price point right here. Okay, exact same pull down so far. You have your 26% pull down, and this is where you're at. You're at 11%. You're halfway there. If you want to do the symmetrical move, I mean, look at that. 20%. 20 spot 60, 20 spot 26. If you do this symmetrical move on Bitcoin, if the indices continue to move down on continued weakness, then you're looking at this. If you break that neckline, Bitcoin 25,283, right? Just below it, 25K, let's call it 24,930. So 25K. Bitcoin breaks 25K. This is the beginning of your collapse back to sweep your low. That will be a signifier, this massive double top that you're going to come retest your low and I believe sweep your low going to 12, 13K. If you can hold above this, again, we have our upside targets. If the markets are able to have this orderly decline with the VIX not spiking up, remember, in massive crashes, the VIX will go over 30, go over 40, go over 50, okay? If that doesn't happen and you have the VIX suppressed below 20 and the S&P drifts down, the NASDAQ finds a bottom somewhere, you can see this reflexive move, just like we had in these wave patterns, back up for Bitcoin to try to flip 30,825 and come to 34,770 or potentially 39,791. Now, obviously, my macro view, we've been over it many times. I think this pull down could be if this thing starts sliding with PAL, right? If you go from orderly with a suppressed VIX to VIX shooting up over 20, going over 30, this is your big pull down to come down and retest your lows, okay? And looking at that from a spring or a fall equinox perspective as well. Remember, spring and fall equinoxes are 180-degree pivots. It's a completion of a circle. This is why market tops and market bottoms happen in spring and fall equinox. This is why you had the pandemic happen in a spring equinox. This is why you had the bank failures in the GFC, with starting with Bear Stearns, happen in the spring equinox, and then Lehman for the fall equinox. And then in this cycle, you had SVB, New York SIG, and whatever that other shitty bank was that failed in March. They all failed when? Spring equinox. Guys, markets move in cycles. You can learn these things. These things are able to be learned and give you an edge in the game here, okay? So we want to see what Bitcoin does. Let's go to the next chart. So the problem, I mean, something a little bit scary here. If you trade with Bollinger Bands, this is our gummy worm. I have mine set to some unique settings, but you can see, because I really want to focus on the volatility, you can see here the compression. If price continues to drop, this is going to open up, right? Simple concept, expansive moves, you get expansion on your bands. If this starts opening up to the downside, this is going to propel potentially with price down here to come down and retest your 25. That's the key problem you have right now, is you have very tight volatility with weak markets and Bitcoin starting to dump. Okay, doesn't mean it won't hold support somewhere, but you guys need to be aware of that. If we go ahead and check this here on our fibs, key fib, guys, 27,455. You want to hold the 618, 27,455. You flip the 618. What I always tell you, your bias is to come to the 1 fib. Are there checkpoints between? Sure. 786. It's a square root of the 618. 1272 comes after the 1 fib. Square root of 5. 1618. Okay. So you have the 786, but your bias will be to come and recheck your base if you sweep your 618. So you need to pay attention to that. Bitcoin finding a resting spot right now, 28,388, right on top of the 486 fib. Okay, so you want these things, if you're bullish, to find support during this orderly decline. And when we look at the money flow, you have more room that you can come down. You are not oversold. Look at the compression on my squeeze, on my momentum master here, one of our market makers indicators. Guys, all of our indicators you get for free when you join the room for free. We don't charge you for indicators. There's no extra things you have to pay for. Everything, because I want everybody to pursue their financial freedom the best of their ability. If you like any of the tools that I use, these are all custom designed by Fractal Trade 15. They're all available for free when you join for free. So you can consider that as well. But this is what we're looking at with Bitcoin, guys. S&P holds some level of support. NASDAQ holds some level of support. If Bitcoin holds some level of support, right now, orderly decline. When's the collapse? When's the collapse? Take out your midpoint here. Take out your 1 fib. Take out 25K. Then you're going into retesting the base, okay? Retesting 15.5. Remember when I was predicting this at the last half of last year, telling everybody, hey, Bitcoin's going to come down to 10.5. At that point, didn't have nearly as many candles, obviously, right? Bitcoin was in the 60K area. It was above what, 65K, 68K? I was saying 10.5. Tom Lee was on TV on CNBC saying 250K. Multiple TA people were saying 250K. The stock to flow guy was saying 250K or whatever he had of 180, 300K. I don't know. Everybody was multiples above where the current price was. I said 10.5. A year later, we got to 15.5. Pretty close. Got to do my Larry David, right? Pretty good. That was pretty close, right? But that's not the bottom, guys. The bottom has never been put in prior to a recession. And I'm not saying this to beat up on you guys, but we have a Discord with 12,000 people, and every single day people join and say the same thing to me. Man, I wish I didn't listen to so-and-so when Bitcoin was 50K and I bought it because they told me it was going to 250K and I'm stuck. And guys, that takes a long time to recover from. And in the case of markets, but the crash after the dot-com crash took 7 years to barely take out the all-time high, and then instantly had the GFC, and then you fell down again, okay? So that's what you guys need to be aware of in these cycles. Bitcoin has only existed in the longest bull run in stock market history. So when you're looking at models like stock to flow, it's a bull market. You're making projections based on a bull market. You're not in a bull market. You can be in a bull trend. You are in a bear market on the cusp of a recession, the leading economic indicators collapsing around you. Be aware of that. Price moves up and down. The economy is slowing, not only in the US, our brothers in the UK, our brothers down under, the Aussies, the Kiwis, you guys all see it too. Look at China. Even though they fudged their numbers, they are slowing down tremendously. All of the Eurozone is slowing down. Germany is in a recession or on the cusp of a recession. Everybody I listen to saying that they're in a recession. Second single largest economy in the world ahead of China. And then if you take the Eurozone as a whole, you're at the second largest group economy in the world behind the USA. I played that clip for you, that crash clip, guys, and you saw the European reporters, the financial reporters going over the numbers of declination. All these financial markets, including cryptos, will move together. And then metals will move. Oil will move. Everything will move together. Certain things are going to recover faster. Certain markets are going to hold up better, but they will all move when the largest economy in the world actually craters. And we're not there yet, but you're on the cusp of a big move with key indices starting to take out key pivot levels. Okay. I will keep you guys informed. You guys stay tuned to the channel as always. All right. So Bitcoin, man, I got to stop ranting. I am on Mountain Dew Energy this morning. So this is my third one. I needed to wake up today. So looking at Bitcoin, guys. So again, just watch that 618. You're at the 46, 28, 388. And then you have the 618, 27, 455. Obviously losing that pivot will give you that massive double top structure we have talked about extensively on this channel. Then that would be your breakage to come and retest your lows. So let's go ahead and go forward. What's the S&P doing? Broke down within our channel within a channel, as you guys can see. Where's our pivot date? Right here, August 14th. What did it do after the pivot date? Sold off. All right, so a couple of things, guys. So in our Discord, I shorted the S&P, posted a trade idea, 45.92. S&P got to 46.06, okay? 45.92, pretty good. Might have to have Lee pull that edit. So those of you that don't know what the impression that I'm poorly doing is from, see if I can find it before the video. But 4.64%. So off my trade, you basically got a 4.64% move. Now, to put this in perspective and why people build financial freedom vis-a-vis trading is overall the last 20 years, S&P average gain was 8%, right? And this is post all the money printing, all the boosting into the economy, because before that I think it was like 6% was the average, and it went up to 8-9%. You got more than half of that in a single trade, right? And it took a matter of days to play out. This is how you build wealth trading. So let's look at this from a support level. From our support level, what did we do here structure-wise? Structure-wise, we took out the 618, 44.67, fell below the 786. Again, you take out the 618, guys, where's your bias? Bias will be to retest the one fib from whence you came. That's why it's important to understand impulse moves and where to pull fibs from. 43.79. Can we come down and kiss it or just come back up? We'll see. But because we had this move, let's look at our money flow. Because we had this move, I want to see some things here. We tried to put in a double bottom here on the money flow, right? And I look at our momentum. Momentum's down, but it's not dramatic. I mean, look at the up momentum here. So this looks like, and you got a doji. Obviously, it's early in the day, whatever time it is. It's still 11 a.m. Eastern time. It's early in the day here, but you got doji forming. You may just kind of curl up. In general, what you see in marketplaces, how double tops form, is you have euphoria coming up into a move. You have big players, right? This is why you get your Wyckoff range. It's the whole basis, the whole premise of Wyckoff is understanding market structure. Big players, for whatever reason, in this case, market top, rising yields, whatever the reason may be, start selling, okay? So strong hands sell into these weaker hands, and then when the weaker hands figure out what's happening, they start selling, and then price starts declining. And what happens is you get the BTFD bros, the buy the effing dip bros, the MPC buy pigs that come in, watch mainstream media and tell you, this is the pullback I want to buy. I want to buy this pullback. And then what happens? It comes to fruition. And then you get a rise. And that's how you get double tops. And it happens over and over again, especially in indices, guys. Over and over again, you see double tops and you see breakouts from them and you see collapses from them. Okay. But that's exactly what happens is retail gets milked. They get dumped on at a peak. It comes back down. People buy it back up. And if the double top rolls over again, that's how you get your big breakdown. And that's how the big firms make their money is off of the idiots watching mainstream media that are brainwashed and don't understand what's happening in the marketplace. So 43.79. Watch that level, key level. We're below our 50. Do I have the 50 on here? We'll go ahead and add. Yeah, I do. So we'll go ahead and add that. Below the 50, below the channel. Okay. I do think, I mean, because it's so orderly, and that could change if the VIX really does start spiking up. If the VIX starts spiking up, you're going to see the legging down. Okay. And you're going to come down and retest the base of your channel, 42.36. And where is it game on for coming down to retest your lows? Breaking out of this channel, breaking below 42.36, because your next level is 4,000. You break below 4,000, you're going down to retest your lows, right? And this is why utilizing Fibonacci and advanced strategies and patterns, you can try to catch tops and trade because these can be massive, massive trades. But for right now, I'm looking for some type of rebound up to some level before that next push down. It's going to be really interesting what Powell does with the Fed predicting a massive GDP number. And again, they revise these numbers all the time. It could dramatically change, but we'll see. If that number comes to fruition, the markets, because it's too good a news, are going to be very scared. And you're going to see a lot of selling. You know, the Taylor rule would have, John Taylor is a Stanford professor. See, Milton Friedman figured out inflation in the 70s. You have to have real rates above the rate of inflation. And if you use the Taylor rule, who was actually a Fed nominee under Trump, I don't know why Trump put in Powell, okay? That's one of the F-ups Trump did. He put in Powell. He had talked to Taylor about Taylor taking, but Taylor probably said, hey, we're going to run this like you actually should run an economy, actually should run a central bank. And, Trump being a new politician, just like other politicians, why would you want a guy that's going to make it hard to get money when you need it? Because we are a debtor country, right? We are a country where everybody is in debt, where the country itself is 34 trillion in debt now, 33 trillion in debt, and it's going to keep going up, guys. So you need that money printer, and Taylor wasn't going to turn it on, but Taylor has a Taylor rule, which is commonly quoted. Jeremy Grantham talks about it. Ray Dalio talks about it. Two of the richest people in the world. They talk about it. But with the Taylor rule, our rates right now should be above 7%. We're at 5.5%. The Fed is going to raise again if the market doesn't collapse ahead of time. The Fed will raise again, whether it's September, October, whether it's both, because inflation, despite what mainstream media said, went up. They keep saying, we got a good inflation report. Turn on TV today, you'll see it. We got a good couple of inflation reports. Inflation went up. It went from 3 to 3.2. The Fed's predicting it to go up even more on this next report. So what they're doing is saying, well, it went up as much as the Fed thought it would, or slightly under what the Fed thought it would. Therefore, good report. Inflation is compounding. You guys that watch this channel know that, but everything that went up in price, there's no basis for it to come down in price because the Fed's targeting a 2% inflation rate to increase prices 2% every year. So the dog food I buy for my dogs that was $24.99 prior to the pandemic, which is now $32 to $34.99. What is the basis for that price to come down when we're trying to take inflation down to 2%? That means every year it should go up by 2%. Cost of living will go up by 2%. So just put that in your hat, guys. This is a long video now at this juncture. Half of you tuned out, but we're going to keep going. So let's go ahead and look at this. So the S&P, again, let's see what we're at here. If we get that double bottom, we could potentially bounce back up. Man, I'm unhinged. I had too much caffeine this morning. Pivot, again, we have our pivot down, same levels I just showed you on the prior chart, but the next pivot date, October 12th. When did the market bottom? Last rally? Last year? What was the market bottom? October 13th. When was the market top last year? August 14th, right? So you got to look at these things, guys. And the Jackson hole here, actually it was August 16th, okay? August 16th. But Jackson hole 24th, 26th, and we'll see what happens. And I'm looking for this bounce back up, tradable double top. Man, that trade will be epic if the market does what I think it's going to do. NASDAQ continues to fall. Again, sweeping this valley. Here's your danger here, which is where you may be looking to find support. You can see the declination slowing down on the daily time frame. If you sweep this valley, guys, you're looking at 14,663. 14,663 is your line in the sand here for the NASDAQ, and you're somewhere in between there right now, continuing to fall. Why is the NASDAQ continuing to fall? We're going to look at Apple next. But when you look at the money flow, you're still not at oversold. This could come down to 14,663, or it could start reversing. Momentum switched over to bearish, obviously on the daily, but tech is selling off because tech was a big bubble. The AI movement was a big bubble. Palantir was a bubble. You people need to understand this. Apple trading at 30 times with 3/4 of declining revenue, something that they haven't had happen since .com, and they were trading at 30 times. This is destined to happen. I saw people on YouTube talking about how they bought down here because they want to see Apple come and fill this gap. Gaps, guys, the reason gaps work is because people think they work, right? It's, again, herd mentality. There's no reason that it would come up to fill the gap other than the fact traders believe it will come up to fill the gap. So at some level, if we hold support and we do get double tops tradable in the marketplace, you may come up and fill the gap. But if you go look at any chart, there's plenty of unfilled gaps going all over the place. But that's a big thing with day traders, is filling gaps. But it's one of those things that just comes to fruition because people believe it. And so Apple's at 174, breaking below 176. How good was my Fib projection for this top? 196.47. Look at that. Within a couple of dollars. 196.47, big move down. Let's look at the Russell. Russell's still selling off, 786, 1859. Broke your pivot top. You're going to your pivot core. We'll see if 786 at 1859 holds. If not, you're going back to retest the top of Wyckoff. You are in the oversold territory on the MFI. Momentum is not strongly bearish, but it is bearish. So we'll see if this does hold at 1859. Again, these are setting up one of two ways, guys. You're going to get support hold at a level, get some type of NPC rally, and you'll be able to potentially trade that rally. Or these things are just going to keep drifting down until we have something snap with the catalyst, which I believe will be Powell at Jackson Hole. Man, this is over 30 minutes. Nobody's watching 30-minute videos from me. I get it, guys. I get it. But I'm going to continue and wrap it up. So French 40, market's moving together. French 40 is declining. You're at 71.87. French 40, look to try to hold your base down here at 7,083. And it's on its way. You have 71.43 as your immediate support. These markets will all move together. Again, your all-time high was right here on the French 40. U.S. markets continue to break down. If this is the breakdown to lead to sweeping our low, then you're going to see this breakdown out of the Wyckoff range and really start to move down. Same with the DAX, guys. DAX fell out of our upwards channel. The sideways Wyckoff market here fell out of the upwards channel. You're at 15,677. If we do get some type of rebound to retest, you're going to see the DAX do that from a lower level. Okay, so all these are markets that are moving together. I don't want to spend too much time on this, but let me go ahead and just pull a fib from this pivot low here. You're right at the 786, 15,678. If you don't hold that, watch 15,446. Okay, let's go ahead and look at gold. Gold went exactly where I told you it would go, right? Exactly where I told you it needed to hold. The bottom of that valley, 1893. Gold went below the 1893 again. Lots of perma bullish YouTubers on the metals. Now, metals will move in waves just like everything else. Could it be a buying zone here? It could be if the markets rally back up. Gold can wave back up. You're approaching oversold, not quite there. Gold could wave back up, guys, but this channel is intact here on the daily time frame. The cycle, I believe, is a GFC cycle where gold will fall 34%, and then you will see a big rebound. Silver went down 61%. So watch 1893. If you do hit your overbought and you put in your base here, then watch for the wave back up, which you can do by pulling a simple fib retracement. We're not there yet. We'll have time to do that in another video. We're running out of time here. Looking at silver, silver fell right to the 618, 22 spot 29. And again, silver, same thing. Silver is going to follow gold, right? You have your uptrend, which is why so many TA people on YouTube are bullish still on this asset, not understanding that it follows the markets. Okay. So if we do get our wave up, look for silver to try to come back up once again. And you have your previous resistance levels here as well at 26 spot 13, 25 spot 27, and of course your immediate level above you, 23 spot 75. And again, I would be looking at all these for potential short opportunities when the time comes and we start seeing the markets really give way. Long video, long caffeine fueled induced video. Maybe you need to go get some nicotine after this one. All right, guys, I hope you enjoy. I hope you all have a fantastic weekend. And leave me your comments, leave me your questions. As you can see, I reply to all of them. Take care, guys.